So Intel Corporation recently hired a new CEO, and a news article came out about it, and something kind of magical happened in the stock market. And so I'm here on spring break. I just wanted to come outside and record a video on it because this is a case in point when people talk about why do CEOs get paid so much, how big companies and investors and stuff like that think about it. So to give you an idea of what happened here, I pulled up the article and I'm going through it. But Intel, so the kind of OG big time chip maker, strategic company here in the United States, dominant company worth $100 billion. That's how much the stock market has valued this company. They hired this guy, Lip Bhutan, as its new CEO. So I apologize to Mr. Tan if I'm mispronouncing his name, but they hired him and something kind of crazy happened. The stock went up 16% in a day. It's just an incredible testament to how investors and how people involved at the highest levels of business think about the value of the right CEO. And I want to do this video and talk about like why at first glance you're like, one dude's worth $16 billion to this company. Well, actually he is. He may be worth more than that to the value of the shares for the shareholders. And I'll talk about the two reasons why to explain it here in this video. If you're interested in that kind of stuff, my name is Michael. I make videos like this about explaining concepts of business, especially things that can help us as smaller entrepreneurs, because it turns out the value of a CEO and how important they are in making the right decisions for a business. It doesn't just work for huge businesses like Intel, it works for little businesses as well. And then I'll exit the video so people can yell at me about why CEOs are overpaid in the comments. Look, if you're interested in this kind of stuff, if you like learning about business, if you want to demystify it, if you're an entrepreneur on a journey like that, that's what this channel is about. I do this out of love and for fun. So if you like that kind of stuff, stick around and give me a follow. I would love to have you. Even if you don't watch, it would be nice though. So before I get into the explanations of why a guy like Mr. Tan is paid so much and why investors see so much in somebody like this, one of the things I want to note with this guy, he's been on the board with Intel before, so he knows the company intimately well. The other board members know him pretty well, having been on the board with them. But the thing that's most important and the thing that, if I'm looking from the outside has me really excited is Mr. Tan has done exactly what needs to happen at Intel. Before. He went and turned around a company called Cadence Design Systems over about 10, 15 years. He did 11 years. And turned it into a hugely successful outcome. And frankly, that is precisely the job to be done at Intel right now. The company is absolutely struggling, has gone through different management shakeups, hasn't been able to figure out a path forward, a bunch of strategies that just didn't turn into anything or didn't end up there in terms of fixing the company. So Mr. Tan's done this before. They all know him super well. And if you want to have somebody do a job for you, like the right person to pick is to hire somebody that's done the job before and have them come in and do it again. Because you have a data point, which is they were successful the last time. So there's a better chance they're going to be successful this time. So let's talk about, there's two mental models to use to talk about why a CEO is so valuable to a company like this. And one is the downside case and one is the upside case. So I actually, believe it or not, I hate the website Quora. It's such a spammy set of things in terms of the way they approach stuff. But like, as I was like Googling this to come outside and talk about it, this post came up and it was actually genius. These two folks, the Stan Hanks and a second gentleman, talked about the two mental models to think about why a CEO is so valuable. So the very first one, in thinking about why a CEO is so valuable to a company, is to think about it in terms of what can go wrong. And so it is entirely possible for a CEO in their role to sign contracts and to put together and make decisions for a company that will put it out of business. Like that's one person that if he or she or they makes the wrong mistake or signs the wrong deal, it could kill the whole company, right? So for example, you are signing leases or you're borrowing money or you are entering sales contracts with folks. And I've seen, for example, companies sign sales contracts to do projects for folks. Say there's a general contractor in my hometown in San Antonio that signed one deal that killed their whole company. They agreed to go do a big refinery construction down in the port of Corpus Christi down south in Texas. I'm not in Texas, I'm in Mexico, but they agreed to go do that and they way underbid it. So by signing that one contract, they underbid it, the contract was going to run at a loss, and the whole company ended up going bankrupt because of one contract that was signed. Just unbelievable amount of risk that and reliability that's put on one CEO to make the right decisions on these things. And here, Mr. Hanks talks about it. If the CEO screws up, I mean, really screws up, not just misguesses what color will be popular in the fall or pisses off a stock analyst, they can kill the company. And he goes through and talks a bit more about the impact of this. If they totally screw up, not only do the investors lose all their money, the bank that loaned them money can lose money, but all the employees lose their jobs too. Like, there is so much riding on that one CEO making really good decisions, because ultimately in a business, like, the CEO is dependent and the person that, like, we all depend upon to make good decisions. So that's the downside argument for why CEOs are paid so well. There's an upside argument, which is, you know, the future growth of the company. So here, this second answer, and by the way, I was shocked to go onto Quora and somebody actually gives good answers to these questions about how to think about an issue like this. Like, why are CEOs paid so much? Well, I'm telling you. One, they could kill a company. But two, here, Mark here talks about how the boards think about getting the perfect person in that job, okay, in the CEO job. And so here Mark talks about, he says, if a board of directors is overseeing a $10 billion company and they believe that one person can drive just 1% better returns through strategic or management talent than the next best person in that role, then that person is worth up to $100 million per year. Just do the math. If one receivables clerk is worth 1% better than the next person for that job, how much more are they worth? Obviously, the few roles below the CEO of a major corporation have the kind of economic leverage that could command their spreads and earning power. So basically, to say this in like plain English, like, the value of having the absolute best person possible in a CEO job for a particular company, and especially a big company, can be worth hundreds of millions of dollars. So it makes sense for the board of directors to pay up as much as possible to get that absolute best person. And that's totally different than, say, an individual contributor who doesn't have that level of influence over the entirety of the business. So anyway, that is why these guys get paid so much when you're, and gals, when you're that good, is you are worth that much to these companies because they see it as, well, what's going to happen for the upside of the business. So in closing, those are the two reasons, right? Number one, there's a downside case. You don't want to lose your money, and investing in the right CEO is worth it. The upside case is the right CEO can grow revenue like crazy. But I want to close with just kind of the way both of these guys here on Quora went through and talked about, like, the fundamental like beliefs that back this question here of, like, is the average CEO worth 1,000 times a median worker? And they kind of debunk why that question is just totally flawed, right? Which is, at different places in the organization, like, there's more leverage in different roles, right? If you're the CEO, you're overseeing, and the decisions you make affect the entire enterprise. If you're just an individual contributor, the decisions you make just affect a small, like, portion of the enterprise. And your impact is that much, and therefore the business is, makes sense for the business to be rational and pay up for those types of things, to have the right CEO. So, unfortunately, I wish it wasn't so, but humans are not cogs in a machine. I think Stan here talks about that. Humans are not fungible. Like, we are unique, and there are some people that are, like, if you follow chess, Magnus Carlsen of business, and there's some people that are not. And if you're going to pay up the value of Magnus Carlsen, running your business, if you could find somebody that is that good of a CEO, is totally worth it.